Hello everyone, this is the pre-market report video for today 13th March 2024 for the Indian stock market in terms of Nifty and Bank Nifty. Yesterday our Indian market was really very dramatic. From the morning itself, HDFC Bank was very positive due to multiple bulk deal demand. In addition, yesterday morning HDFC Bank officially initiated the process for demerging their subsidiary HDB Financial Services, and they said that they were planning to list that as a separate IPO. Honestly, I don't know what to tell for HDFC Bank management. Just 6 months ago, they created all the fuss and merged the bank with their housing division, and now they are starting to demerge their financial division. Regarding the reason, they said they want to value unlock their diverse financial service sector. Anyway, based on the yesterday's price movement, it looks like market took that as a positive, and throughout yesterday, despite the volatility in Nifty and Bank Nifty, HDFC Bank was steady positive for over 2%. For now, bank's management board targeting it to list on either last quarter of 2024 or the first quarter of 2025 as a separate subsidiary company. However, though HDFC Bank was steady, there were severe volatility in other banking stocks. The most possible reason might be two. One, due to the issue around the electoral bonds in SBI. If that was the case, then other banks should be immune to the volatility. But yesterday, that was not the case. Most of the banking stocks was volatile. So I think the second reason might be the more probable one. Around the mid-morning time, CARE Rating released the report with the title Credit Deposit Ratio Beats 80% Mark. Those who invest in banking stocks and Bank Nifty, please read this report. It's really good and important info to know. I will attach the link in the description below. Credit deposit ratio 80% is like huge warning for the liquidity concerns that already Indian banks facing now. Please pause and have a look at this graph. This is the last 5 years credit deposit ratio curve. As we see in February 2024, for the first time it breached the 80% mark, which is not good. Then you might ask, what's the good number? This metric has to be in balance. A low ratio of possibly below around 70% suggests underutilization of resources, and then this very high ratio 80% signals potential liquidity issues and pressure on resources. There is no ideal range, but it's important for banks to maintain a balanced ratio to avoid their respective asset liability mismatch. The main reason for this is very high credit growth and low deposit growth. Please look at this table. In 2021, deposit was almost double than that of the credit. Then in 2022, it was balanced. In 2023, credit outgrown deposit by 5%. Now in February 2024, credit increased over 7% than the deposit growth, and it is not slowing at all. It looks like Indian banks are giving loans like crazy. Hope we won't get another NPA issue. So I think most probably this report influenced the banking stocks, since yesterday almost all the bank other than HDFC Bank was down significantly. Thus, finally Nifty closed on the same place as Monday closing. About institution activities, for the 5 days in a row, both FII and DII were net buyers. FII's net bought for marginal 73 crore rupees and DII net bought for approximately 2,360 crore rupees. And there was no trade volume abnormalities. So this is the quick takeaway from yesterday's market. Moving to US, before their market opening, US Bureau of Labor Statistics released the US consumer inflation data for February month. On the face of it, overall inflation on year-on-year basis, it increased to 3.2% in February month compared to 3.1% in January month. It looks like not a good number. But if we take out the fuel and food, then core consumer inflation still dropping, and for February month, it dropped to 3.8% compared to 3.9% a month ago. Here, this 3.8% is the lowest value in the last 30 months. Though on monthly basis it increased, but the core inflation on yearly basis it's still dropping. So to some extent this inflation number is okay, but still it's not good as what market expected. But luckily, with the help of pure short covering, I guess market took this as positive, which indeed made all three US major index to trade positive for most of the day. Dow Jones increased 0.61%, S&P 500 up by 1.12%, while Nasdaq was rallied 1.54%. In case of VIX, it decreased over 9% from above 15.2, moved down around 13.8. Then in case of oil, it's roughly same as last 2 days. At the time of this video, Brent crude trading at 82.5 US dollars per barrel, while WTI crude traded at 78 US dollars per barrel. Regarding Indian areas, all closed positive of 0.5 to 1%. And if we calculate 1 month arbitrage, then also except HDFC Bank, all of them indicating 0.5 to 1% positive. For HDFC Bank, 1 month arbitrage is crazy, indicating over 4% positive, but I don't think it's actual. Rather, I think bank just adjusting its share price, realigning with its historical dollar term as it was influenced by poor earnings results. So, if we see the year-to-date arbitrage, then it's indicating flat to negative. Hence, it's very difficult to say any regarding HDFC Bank. Anyway, GIFT Nifty at the early morning, it closed at 22,457. It's kind of indicating flat to positive opening. So that's what happened in Indian market and US yesterday. Now let's move to the new India specific info. First, yesterday in the aftermarket hours, Ministry of Statistics released the India's consumer inflation for February month. Regarding the data, for the 6 months in a row, it comes as below 6% RBI's upper target, and it was roughly as same as what analysts expected. So this is okay and positive. But the not so positive macro was IIP data, India's industrial production for January month. On year-on-year basis, it increased just 3.8%, which was weaker than what analysts expected, 4.1%. The main slowdown comes from manufacturing, electricity generation and mining activity. Yearly basis, manufacturing increased just 3.2%. A year ago, it was 4.5%. Similarly, electricity generation was up only 5.6%. Against 12.7% growth in the corresponding month a year earlier. Mining activity increased 5.9% compared with a 9% rise in the same month a year earlier. So I think those sectors will be on focus today. Finally, about stock open interest, there was a long build-up in Oracle Finserv, India Mart, Indus Tower, Power Grid, Airtel and TCS. Regarding short build-up, it's National Aluminium, Piramal Enterprise, BHEL, Kotak Bank, MCX and MRF. As a summary, US market is more of positive and all the major Indian area are also close to positive and GIFT Nifty indicating a flat to positive opening as well. So now the remaining question, will the Bank Nifty stabilize and support Nifty? And also the not so good IIP data is bit of worry. About the things to look out, during 11:30 to 1:30 p.m., lots of UK related macro such as GDP, industrial production growth and trade deficit etc. all are due. Then for China, their new loan data and Germany's wholesale inflation data are due to release. Then in the aftermarket hours, European Central Bank's non-monetary policy meeting, Europe's IIP data, then for US, crude oil inventories and 30-year bond auction are some of the items we need to keep an eye out today. Coming to technical, as we discussed, Nifty opened flat, but it was volatile and closed near the opening. Thus, on the daily chart, it formed a doji candlestick pattern indicating indecisiveness. In addition, for the 7th straight session, Nifty was in a range bound between 22,200 to 22,600. I mean, around 22,200, it was a multiple support zone such as 21-day and 10-day exponential moving average and the previous swing low 22,224 etc. So the more probable scenario, that zone will absorb any selling pressure means. Anyway, but still we will get the clear trend only if there is breakout on either side. On the higher side, the immediate resistance for Nifty is at 22,500 and a break above this level on a closing basis will signal a resumption of the upward movement. And closing 22,600 will confirm the upward continuation. In case of Bank Nifty, similar to Nifty, it was also volatile and traded for 900 point range in one single day. I mean, on the downside, Bank Nifty got the support around the 20-day moving average 46,900 as well as 21-day exponential moving average 46,940. Then it got a decent pullback and closed near the opening. Thus, on the daily chart, similar to Nifty, Bank Nifty also formed doji pattern, or we can say high wave kind of candlestick pattern, indicating the tug of war between buyers and sellers. Strong resistance was observed at 47,800 level, and a breakout above this level would pave the way for all-time high levels, and crucial support is placed at 46,800 mark. On the options front, the maximum call option open interest was at 22,500 strike, followed by 23,000 and 22,800 strike, with meaningful new call option writing at 22,800 strike, then 22,900 and 22,400 strike. Whereas on the put side, the maximum open interest was at 22,000 strike, followed by 22,300 and 21,500 strike, with new writing at 22,000 strike, then 22,100 and 22,300 strike. Thus, from the options, 22,500 is expected to remain as the key resistance area with a support at 22,300. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.